May profits be upon you. Did you catch your bus this morning? Did you or did you not? I had an interesting session today. Yeah, I didn't catch my bus. I let my bus go by and I tried to catch an express train. And, you know, I I wasn't standing on the curb at the time, so I wasn't standing on the platform. You know what I mean? And I got a little bit run over, a little bit, but that's beside the point. There was a bus available for you today, and I'm about to show it to you in NZDUSD. We're going to use the power of replay so that you can see what I use as criteria to enter in the trade. All right. We're going to get rid of all of this. All right. All right. So this is what I want to do. The first thing I do is, you see what time it is? It's 6:15 in the morning. I'm usually at the charts between 6 and 7 in the morning, EST, right? First thing I want to do, take a look at the daily. I want to see the daily candles, right? I need to get an idea of what the higher time frame bias is. This is looking, like we're working our way down. So, and very bearish for the last almost 2 weeks, right? Look what date it is, the 21st of October. So it's been pretty heavy, okay? But look at the impulse here. We're finally working our way down to what? A return to impulse, perhaps? That's what it looks like. I got the session indicator on. Okay, so I'm about to turn it back on too. See? And we're returning to this impulsing order block. So that's the bigger picture, right? We could very well be coming back down to this originating order block down here, right? It could be. You see how strong it was, and it broke these highs. But that's a bigger time frame, and that's a bigger picture. So we're looking bearish here. All right. So I really want to find something that goes along with the bias, but I want you to pay special attention, like I do, to this area. If we go back to the daily, we can see there's some indecision going on here. Why? Let's look left. What's going on over here that we have some fair value gap here, a small one right here. All right. We have this very, to call it it is a bullish, bearish, bullish pattern representing demand, but it's not clearly defined, and I don't like those. All right, we did break this low here. This is the things you want to make note of. We broke this low. What the heck just happened? We broke this low. Broke this low. These are key lows. Look at that. All right, boom, boom. All right, that's structural breaks. Okay, higher time frame. So maybe we might be looking for a higher time frame pullback to an impulsing order block. All right, that broke these lows. All right, these are the things that are in my head. Okay, let's go to the 4 hour and take a look. Yeah, look at this. Just glancing at this mess, you can see that price is transitioning from bearish to bullish. It's transition. This is a quasi down here. All right, and that's not hard to see just looking at the candlesticks. Okay, so I want to be wary of bullish action, bullish price action from here. All right. Yes, the overall bias is still bearish on the higher time frames, but we could be transitioning so we can pull back to this area or higher for that return to impulse after breaking structure. All right. This is especially important when you look at this area, this area here, and this area here. You're thinking, when you get the the lower high made, and you make a lower low from there, this becomes your trading range, right? Until it's broken. Then this becomes the low of your trading range, and the whatever made this low here is your lower high, and that becomes your trading range until it's broken. All right. If it's broken to the top side, you start to think, okay, is there a shift in momentum? All right. Is there a shift in momentum from bullish to bearish, or from bearish to bullish? That's what you ask yourself. All right. That might be. So when you see a break and a close above, you're looking for that return to impulse. Where's the impulse? Down here. Did we return down here? Yes, we did. And then we came back up. Not hard to follow. All right. We have another break here. All right. We have a higher low there. That became our trading range, right? We broke the trading range to the upside. All right. What are we looking for? Return to impulse, right? But we broke that impulse. Now, what does this mean? That means a change of character. Keep that in mind. All right. You break the high, and then you break the low with that high. All right. This is a strong high. This was a weak low. We became a liquidity point. This liquidity point got taken. So I'm inclined to think we may be heading up to return to impulse. Even if this is still a bearish situation, I'm thinking that we're going to return to impulse somewhere up there and then continue down. But that's what's in my mind. All right. We're only on the 4 hour so far. All right. I want to get down to the nitty gritty, to my time frame. All right. We're almost there. 1 hour. All right. Now I'm starting to want to put down some POIs. I want to establish some POIs now. Right. Where's my, I'm gonna mark out some things like yesterday's high, previous daily high, previous daily low, session highs, all right, for the London and Asia sessions, because those things are very important. All right. So what made price turn here? Let's mark that. It's that simple. It's this. I mean, I'm going to keep this too simple. All right. This is actually a reaction to this one. So this is the one that we want to take. All right, this is the originating order block that impulse price passed these lows, okay, and caused price to turn around here. All right, on a higher time frame, this might be a 4 hour order block, if I'm not wrong. Yeah, this is a bigger order block, but where we have it, this is fine. We see that price reacted from there. So, and we want to, I want to refine, but not over refine my order blocks. See how it comes back and retest. That's awesome. That's awesome. That's good stuff. This one actually reacted off of this one, right? Looks like it did. No, it looked like it came close to it. Anyway, so I'm looking at these lows. Oh, come on, man. I'm looking at these lows, right? I like these lows. All right, because this looks like one of these could be a left shoulder. This could be a head. And if we have a return to impulse, I would be looking right here. You understand? All right, that's the things I'm looking for. That's the things I keep in mind. Okay. I'm also going to keep in mind we have an order block here. All right. And we have a bullish engulfer here, and I'm going to keep that one in mind. All right, look where we're at now. We're on the 1 hour time frame. Got it all in mind. You got it? All right. So what the idea is, I want to trap price in between stops. Stop A, stop B. All right, where price may bump in between. Okay. You see the impulsing here. This is an impulse past this high. We broke that high. So a return to impulse might be in order. Okay. Let's go down. Now we're getting down to the nitty gritty. Why is this nitty gritty? Because this is where I turn on my session indicators. All right. So I can look at New York, last New York session, and I want to mark the previous daily highs and lows. And I do it quick by just tracing over this Asian session indicator. All right, this is a previous daily low, and we got a previous daily high. Right, y'all. Hold on, where's that right, y'all? Right, y'all. Is this it? Yeah, right there. Boom. Previous daily high. All right, we got the previous daily low, previous daily high. Boom. All right. Also, I want to mark my what do you call this? The session highs. This is a Asia. Oops, that's wrong. Did I get that right? There you go. Asia high. Copy paste. Boom. Asia low. Very important, because you know that beyond the highs and lows of the sessions, this thing is driving crazy. That's Asia low. Got it here, got it there, right? Now, one more. I want to get London. You see how London is in between? Little London. London high. Beyond these session highs and lows is liquidity for market makers to go back and revisit. It's very important. If you know where the liquidity is, you know which way price is going. Yeah. All right. And that's a London low. All right. I can turn this off now. All right. And there you go. All right. So now I want to look closely at what happened during Asia and how it's setting up London. Got it? All right. Right now, I got these order blocks here. It may not even get down here. It may stay in this area. All right. So I want to start refining stuff. All right. I got an order block here. What am I looking for? I'm looking for places that price may revisit during New York. So I'm going to stretch this all the way out for the New York session. Let me get this bullish. All right. And this is bullish as well, just to keep my colors right. All right. And this is also bullish. All right. Usually I'm putting in the times and all. So you see how price came back down in here, retested, and then moved up. That allows me to adjust this order block. Now, I got it down to this last bullish engulfer, but why don't I have it where price came in contact with it? Because what price did was it came down. Oh man, come on, man. What the heck just happened? All right, it came down and filled in this imbalance. That's what it did. Filled in the missing price, filled in the fair value gap here, and then turned around. Doesn't mean it's going to start going back all the way up. It just, this is what price does. It hits that fair value gap and then turns around and then comes back. It then comes back down to the order block that's nearby. So a lot of times I'll use these as targets for TP. Got it? Now, what do we got? Do we have a ceiling? Do we have a floor? We got a 15-minute floor here. All right. And we have a ceiling up here that I want to look right here, because this is in the Asia session. So I'm thinking that price, as it broke here, it broke this top here, right? This is also the previous daily high. I think this is going to be a very pivotal area, because we've taken a lot of liquidity up there. How many times we visited this area for selling orders, right? We have a bearish, bullish, bearish pattern here, and I'm going to use that right there, and I'm going to mark it as a bearish order block. 15. All right. Boom. Okay. So we're cooking. We're cooking. I'm going to stretch that all the way to New York. All right. And hopefully, if price visits up here again, or visits down here again near my New York open price, then, or if it comes down even further down here, I'm definitely going to be looking to take a buy or a sell. What is my higher time frame? My higher time frame bias is bearish. Okay. All right. That's the overall bias, but I would also bear in mind, are we returning to impulse, after a break of structure somewhere? That's something that I have to keep in mind. If we break this low here, all right, if we break that low, I'm going to be looking for price to come back up here and visit this this bearish order block up here, so that it can, then I can take a short. And that would be perfect for me if it happened right around New York Open. If it doesn't, that's fine. Maybe it stops here and then goes up. It turns bullish here. I'm going to take a buy here. Okay, all right. Maybe it has come back far enough, and we have a bullish order block here or here that is strong enough to keep price going. All right, because we are here near the London low. Maybe it might want to dip its toe past that London low to grab the liquidity and chop up. I'm going to check it out now. Let's advance. What time is it now? 7 o'clock. We are right smack dab in the middle. We're in actually a bullish order block right now, and I'm going to keep that in mind. All right, and we're on the 15-minute, so I'm going down to the 5 to the 10-minute. Let me take a quick look. It's 7 o'clock. I'm going to take a quick look and see how things are developing. I got a bearish order block here. I want to clear that up just a little bit so I stop being confused. All right. Yeah, we got a bearish order block here. That price is respected. Good. If it comes back up here, I'm going to be looking to take a short. All right. And price impulsed up here and then came down this far. I find that interesting. Is this discount pricing? Remember what's above 50%, what's below 50%. If you use your Fibonacci's, let's take a quick pull and excuse me. Right there. All right. We did come below the 50% mark and we're at 61. It has to come at least 61. So if it develops a bullish order block here, I might want in, because I don't think, I'm thinking that it returned to impulse. It returned far enough. You understand? We have an impulsing order block here that actually broke that top here. So, whether this is the originator or this one, this is the one that has that dynamic push of a price. So I'm looking at that one, and this one was never mitigated. So this is going to be a big attraction for price as well. All right. So are we up to speed? All right. I don't want anything in the 50% area. It got below that 50% area. And if it comes down here, I'm going to be looking for a buy. All right. I'm going to whittle this down. You see that? Refine this order block to a 10. All right. Instead of a 15, I'm going to have it as a 10-minute order block because I refined it some more. All right. We're already past 50. We don't need the fibs anymore. So if we get a revisit here around my time, hey, it's all good. I'm going down to the 5-minute. And we're going to advance price some. What time is it now? 7:30. All right, 7:45. We're still in the middle. So I'm kind of, got my fingers, I got my fingers on the trigger, I'm ready to look at something, you know what I mean? But we're directly in the middle. So I'm looking to see what price is going to do. See, look what time it is now. It is 8 o'clock. 8 o'clock. That New York strip is about to come. So you know what I'm going to do? I'm going to put a pending here. I'm going to get ready to buy this thing. And I'm going to put my stop loss below the order block in which I enter. All right, that'll give me a 3.9. That's not bad. That's not bad. Remember, the confluence is we have the London low right below us. We've already visited here one time already. All right. What would my target be? It would be the highs. All right. Previous daily high is an excellent target. Excellent target. And this ultimate high up here might be a good target as well. This the peak of this this impulse. That's the highest it went. So TP1 is always going to, for me, is always going to be 3R, because you do 3R every day, which is not hard to do at all. If you take that 3R and you run home, you're going to be rich. I'm telling you right now, this is 3R. This is a little bit more than 3R, 305. I'm not driving myself crazy trying to get it exact. All right, 3R here, and then let your runner go to the previous daily high, which I believe it will target. All right. I think we've kept, the other thing is, I think we've come back far enough into discount pricing at 61.8 that a good buy from here would be, you know, valid. All right, here goes the New York strip. And we have not reached down here yet, but we are getting close. And I'm kind of excited. Ah, look how far we came into here. Oh my goodness. Now I'm starting to think, oh man, are we coming back to the source that price sprang from? Is that what we're doing? Is that how this is going to go? That's exactly what I'm thinking. We came close. We respected that order block. We're still in this trade. Can I get another bullish candle? Yes. Yes. Guess what? We're over 1-to-1. We are hard charging. That thing got all the way up here to almost 3, man. Hold on a second. Did we hit 3? 2. Look like we hit 2R up there. Okay, I take that. All right, at 2R, it's good. It's a good deal. And we're going. And we're going. We just hit our mark. Bank your 3R, take 85. I say between 80 and 90%. Depending on the price action, I'll take it all off, depending on the price action and how tight the range is. But because we have a lot of room to go, I'm going to take, I might elect to take 50% of this one and let the runner run. I'll take another 25 if it reaches this high. Goodness gracious. Great balls of fire. We're on fire. Let's go. Can I get that TP? Can I get that TP? Bam! Previous daily high. Any questions? Comments? Concern? What you have to do is mark your sandwich. All right. All of this is the meat. This is your bread. Your bullish order block, your bearish order block, your supply and your demand. You got to mark those things, and you got to know that each session sets up the other session, right? The Asian session sets up the London session. All right. And if you would have marked your order blocks for the Asian session up here, if you would have marked supply up here and your demand down here, you would have waited until price came back up here and you could have took that short, or you could have waited till the session open, let it find itself breaking this this structure, breaking this low here, let it find itself in the discount area as opposed to the retail area below the 50% line at the 618 Fibonacci retracement. You want 618 to like 789 or even down almost to the 1. All right, that's what you want, the 100 rather. You want it almost there, you know, for that real discount for a long, and you would have took your long here. All right, you see the order block was there already. The price came right down to it. Boom. Price came right down to it. Boom. All right, and that's how Asia sets up London, and then London gives us that high. we already know there's a previous daily high here. We already know this is the Asian high up here, all right? You just have to, if when price comes up close to those things, you got to say, okay, it's probably going to be used as support and resistance, for those session highs and lows. You just have to know that. All right. And for New York, I'm looking just like you saw. I say, okay, this is the lowest it's been. This looks like a good order block here. This is the highest high it's been. All right. Could it go higher? Is there a better order block higher than this? You know what I mean? Did it just break structure? All right. Are we on a return to impulse situation? Is that why the momentum seems different than the higher time frame bias? That's the stuff you got to ask. Yes, I took a buy here, even though the higher time frame is bearish. Yes, I did. But what was my reason? Because there was a bullish order block here that had a very nice impulse. All right. And it hasn't been mitigated. Now we mitigate, and here we go. That's it. You just want to go with order flow. You want to go with the momentum. All right, the prevailing momentum. Even though the higher time frame momentum is bearish, what are we doing here? You know what I'm saying? Since yesterday, it's been bullish, and we broke structure to the upside. All right, that means there's a retracement due. Well, we had that retracement, a full one, 61.8. All right, it formed an order block here. This might be a place it might want to revisit. That's all. That's it. Don't overcomplicate this. You just want that quick. This was 18 pips. You just want that 10 to 20 pips, and you get out, man. Put your 1%, your 0.5% on this, and you've made bank. This is a 4.67 trade. That's all I'm saying to you. Keep it simple. All right. Keep it simple. All right. Learn one pair. Start with one pair. Master it. Be there at the bus stop. Be there at the bus stop for it. Yes, there was some situations going on with GU today. Yes, there was a situation with USDCAD. Yes, there was a situation with AUDUSD, and especially EURUSD. I got caught out there with EURUSD. I ain't gonna lie about that. I missed. I did not take advantage of my bus here, which would have paid me very well. But I was looking for a trickier entry, and it worked out a little different than I thought it would. I came in here. I came in here. As you can see, there was a mitigation block here, and this we were above the weekly open, and previous daily high is up here, previous daily low way down there, and price was kind of sideways. And I thought that I had this one pretty well figured out, that we was going to turn bullish here, turn bearish here, so I can ride this thing down. Actually, I'm sorry. No wonder this thing is looking strange to me. It was GU that I was in. It was GU that I was in, and I took my short. I took my short a little too early, and I got stopped out. I got stopped out. Really, I got stop hunted out. And I normally I usually take care of those things, but today I had confluences. The weekly open was here, the London high, the Asian high, all of them were right here. So I thought this was going to be pretty strong, as it demonstrated here during London. So I took my short here. Came up and got me. It came up and got my stop loss. And now most of the guys that follow behind my trades, I told them live while we were doing the streamline. I said, this is a good time to, after I made this bullish engulfer here, bearish engulfer, excuse me. I said, this is a good time to get back in this trade. I'm not going to take it. I said, I'm not going to take it because I just want to sit on my hands for the rest of the day. And that's part of my risk management trading plan. And some people did and reaped the benefits of it. I had what do you call it? The markup. I had a lot of notes about how price was going to claim all of this liquidity, because once you know where the liquidity, this is all internal liquidity down here. All right, price generates this on the way up as it was retracing this long impulse, and it came up to this order block. If I would have stood back, I would have seen this obviously. I would have seen this obviously going through all of the sessions. I would have said, hey, there's a good chance it's going to come up here. All right, as a return to impulse, breaking this low, breaking that low, breaking these lows. All right, this was an easy one. This was an inducement short here. All right, by market makers, and I guess I went for it, and I admit it, and that's fine. But if you take your loss, and I took my loss like a man. If you take your loss, you're able to get back in. A lot of people did and took advantage and took that drop and are still making money. I try to get people to get back in this trade. I said, listen, man, this is a good time to get back in this trade. It's gonna go. It's going to take this liquidity out, and it's probably going to aim towards the previous daily low. So that's what goes on in the chat at Lions Den FX. Okay. I hope you found this video helpful. If you have any questions or comments or concerns, please make sure you tell me in the comment section. All right. Just let me know what's going on in the comment section. I will see you in the next video.